Perfect. So, I mean, short introduction, Morgan, welcome to this chat. It's BSCA Big Impact. We started out a few months ago, detailing and giving our opinion about several topics related to trade finance, logistics, and supply chain on the modernization of the industry itself. So Bob made the intro to two of us, explain what you're doing. So I'll leave full stage to you, basically, to introduce yourself, telling us who you are, what you're doing with the company. And we start from this, then we can go down deep into your solution, what you're doing nowadays. And please, stage is yours, Morgan.
Okay. Well, first of all, thank you very much, everybody, for being there. I look forward to the chat. So my name is Morgan Lepinoy. I'm the managing director and global head of trade facilitation for Viatrans. Viatrans is a Swiss-based company that specializes in providing innovative and financial solutions to the logistics industry. We operate in Europe, but also in Africa, with two main focus. One is more towards digitalization of supply chain, and the other one is more around trade finance in emerging markets.
I'll start first asking you, I mean, been a kind of a newbie, few days, put myself under the dress to see I'm a newbie and never heard about this. Would love to understand this term. There's two terms actually. You talk about trade facilitation. We've been hearing a lot about trade funds, supply chain funds, and stuff like this. What's your definition in terms of trade facilitation and how there's an impact in global trade, Morgan? We'd love to start from basic concepts.
Sure. So I think, as we delve into the topic of value and impact in the logistics, we have to recognize the enormous potential that lies with innovative solutions to break down, trade barriers and drive progress. And trade facilitation is all about that, is knocking down barriers and, make sure that, we're able to create a more inclusive, more sustainable, and more progressive trade environment and ecosystem for all involved.
I mean, leave it to you to explain what you're doing now with your company. Give us an introduction, go down deep into, we'd love to know more about Viatrans, what you're doing with that in every part of the solution. We all know, and it's under everybody's eyes nowadays, what's going on in the space of digitalization in trade finance, the so-called trade tech. It's common buzzword going around, start from 2017, maybe now it's sixth year. So, I mean, give us an exhaustive picture of what you're doing and the full range of solutions you're building now, or you have already built and made operative at the moment.
Sure. So one of the legacy solution that we have is called Transfollow. And Transfollow is a digital solution to digitize road transport documents and provide for an interoperable platform on which every actor of the chain can connect to exchange data, create documents, and provide for paperless transport workflow. And then we have another solution, which is called the Container Guarantee, which we're deploying currently in East Africa, which addresses one of the most burdening trade barrier in the region, which is container deposits. Container deposits in emerging markets are required by shipping line to enable the release of containers from the port. In these countries, sometimes they lack standardization, they lack a proper professional and legal enabling environment that requires shipping lines to have some sort of security in order to release these containers and make sure that they have some sort of guarantee that these containers will eventually come back in sound conditions, but also in due time. And obviously, with the term container deposit, that entails, blocking and idling substantial amount of working capital with the shipping line that doesn't generate any interest and deprives small and medium-sized companies from very critical working capital for their business. And so we have devised a solution that addresses that specific issue, and that we're now rolling out. That we have been rolling out in Tanzania and in East Africa since 2020, and now expanding to Kenya in the course of the next couple of months.
Let me ask you this question, Morgan. Can you explain the process it was before, right? So you mentioned a container deposit. What would be the way that shipping lines and shippers or consignees would handle the actual paperwork and the actual transfer of funds in this old process, so that we can understand what the real barrier is and how you guys are resolving it?
So as it was done in the past, and still is to some extent, the importers, through their appointed agents, when they were going to the shipping line in order to clear containers and get the delivery order from the shipping lines to release the containers from the port, had to put down a cash deposit. So it was predominantly cash-based.
Okay.
It could vary between a couple of hundreds of dollars per container to a couple of thousands. So imagine if you have 10 containers to release from the port, you need to put down $10,000. And that's a lot of working capital for any company, but especially for small and medium-sized companies that do not have the financial resources to, have the financial resources to just, idle for X amount of weeks or months before the container is returned and eventually refunded by the shipping lines.
So the bank wasn't involved in this case, or because you mentioned it was a cash thing, right? So
well, it's
bank
predominantly
guarantees in our world exist. I'm guessing that's something that
bank guarantees comes at a cost.
Mm-hmm.
And small and medium, and that's also more a solution that is provided or interesting for companies that have regular shipment, that can foresee how many containers they're going to have to clear over X amount of months or over the year, in order to be able to draft that bank guarantee with the bank in the shipping line. For
Gotcha.
small and medium-sized companies that compete on a day-to-day basis to get cargo, they don't have that same visibility, or they don't have that same cyclical business perspective.
Well,
the
banks really, still see them as a risk, right?
Exactly. Yeah. And so the cost is pretty high, and it defeats the purpose, because obviously it's an additional cost that will have to be borne by the
importer.
Small. Mm. And so some of them just move away from cargo because they are going to be asked to put down so there is a loss of opportunities. They don't have the same let's say incentive to go after business compared to larger companies that have more financial resources or have container deposit waivers.
So out of 100 importers, how many would be impacted by this, right? Rough estimate.
Rough estimate, it's around 50%, especially in the area where we're operating. It's in excess of 50% of the actors that are subject to container deposit. So one way or the other.
A lot of importers.
Yeah.
And is this friction really also only present in the emerging markets where you're referring to in Africa, or is this really an issue in general, Morgan? Just for my understanding in your knowledge.
It's mostly in emerging markets, because they tend to have limits in the legal system. They have the operational challenges are far different and far more complicated and far more unpredictable than the ones that you have when you release a container from the port of Rotterdam.
And we don't have this in North America either, right? So we go by trusts, and we go by, if you don't give me my container, I'll bill you eventually.
Exactly. So yeah, that's basically a bit the idea.
But I think it's a great example that you actually remove friction out of the trade and actually create value, because you have better access to working capital like that. Do you see actually other opportunities similar like that in emerging markets present?
Well, yeah, I mean, I think, you know, the what can I say? If we're able to provide SMEs with affordable financing and more access to customized trade financing solutions, you know, I think, you know, the working capital that these solutions can provide could also be provided by leveraging on the value of their trade transactions. So, you know, take the example of freight forwarders or importers in East Africa or in Africa in general. Aside from purchasing the goods, one of the biggest costs that they have relate to logistics cost, demurrage, damage, you know, cumbersome custom procedures, and so on and so on. And obviously, all of those costs are transactions that give you a picture of that specific importer or clearing agent in terms of, you know, how many instances of demurrage cases does he have? What is his payment behavior when it comes to, you know, facing up to litigations? How many shipments does he do? Where does he ship? How many customers does he have? And, you know, as the more you're empowering these actors with finances to grow their business and, you know, be more competitive, then obviously you're able to bridge another very important gap, which is the trust gap. Because, you know, there is so far very limited solutions available to properly assess the risk of the clearing agent or freight forwarder. You know, the tools that you have currently are credit related scoring, but these only exist if you have a credit. So you need to be eligible in the first place to have one. And most of the time it's a credit maybe on a car or maybe a mortgage, but has nothing to do with the business. So, you know, if you're able to bridge that gap and enhance the visibility of the party that you're eventually going to be lending to, then you offer a much wider span of possibilities and innovations for the entire actors. And, you know, it provides also a more inclusive logistics environment. So I think, you know, there's a number of ancillary and, you know, let's say consequential benefits that you can have just from opening that single door.
So tell us, Morgan, how you resolve this through digitization, right? From cash and maybe a promissory note on an asset somewhere.
That was also my curiosity, Eric, by the way, I was about to ask you. As much as you can go down into detail, Morgan, of course.
Sure. So the solution that we provide is operated through a platform, but it's not, I mean, we don't consider it as a digital platform. The platform is there to manage the life cycle and provide for all of the parties involved, whether it's the shipping lines, the clearing agents, or even the client of the clearing agents themselves, access to the container guarantee and be able to see in real time when a container guarantee is activated, whenever there's a litigation, and be able to monitor the process. So the platform in itself is, let's say, a tool for transparency and for streamlining the process. And beyond that, I mean, you know, obviously digitalization is a huge topic for the logistics industry. And so, you know,
So why do you say that your platform is not a digital solution? Because you kind of started you mentioned that right now, right?
yeah, so I mean, you know, our solution is not supported by blockchain. We're not, you know, it's not powered by any AI or whatnot. But it provides a mean to streamline the process, reduce the paperwork, and obviously also eliminate the need for other intermediaries. So in a sense, we're also participating to reducing the transaction cost for that specific process. Because before they had to organize all of that cash and they had to bring it to the shipping line, and they had to manage the paperwork when the refund was eventually coming in. That was both from the shipping line standpoint, but also the clearing agents. So obviously, if you remove all of that, then you're able to fastening the release of containers, the turnaround of containers from gate held full to empty drop off. You reduce and quite fairly eliminate all of the administrative burden that came with managing container deposit. So through the platform, we're able to somewhat digitize a bit the process, but the core of the solution is not so much a digital solution. I don't know if that answers
but you're eliminating paperwork and you are giving visibility, right?
Yeah.
For me, it's a
no, it's true,
right?
but I've never considered it in the sense of a digital solution.
And
provide there's digital benefits, but
that's kind of where I was trying to lead you, right? It doesn't have to be blockchain, it doesn't have to be AI, it doesn't have to be all the emerging technology or the buzzy words to be a digital solution. You're eliminating paperwork, you're eliminating that physical piece of paper that we've been using for decades and centuries. So it's a digital solution. Right?
And you impact, by the way, so-called trade finance gap by giving value to the amounts being deployed, you see, for a single transaction. Because from my past experience, especially in Northern Africa or in the whole Africa, a lot of money is spent in inefficiency. So, I mean, often banks, they do tend to block money, funds in bank accounts for their own customer, applying for issuance for LCs and stuff like this, even up to the double of the nominal value. So you got money, you got funds frozen that cannot be deployed usefully. So this is creating a kind of parallel value chain for every transaction being created. It's like freeing funds to flow in a productive way. That's what seems to me that your solution is aiming for, and that's why maybe you start from Africa, from East Africa especially.
Yeah, no, I fully agree.
Sorry, didn't want to interrupt you.
Me? No. Again, right? We're chatting, but going back to the process. How has it been received by the steamship lines? Right, so they are the biggest. They have the most risk, I think, in all this equation. How are they liking this solution? And yeah, you can sell yourself, but in the real life, how has it been a life? The steamship lines bear a lot of the risk in this equation.
Absolutely.
How are they receiving a digital solution, and how are they perceiving this as risk reduction versus cash flow changes, right?
So, I mean, obviously the shipping lines were the biggest partnership that we had to work on. The value proposition for clearing agents and importers is fairly straightforward. I mean, you're releasing working capital that could be used elsewhere to grow the business and so on. You're, enhancing their process, improving the way they work. So from that customer segment standpoint, that was fairly straightforward.
So it was an easy sell, yeah.
Yeah, for the clearing agents and the importers. Now, for the shipping lines, we knew from the get-go that if we didn't have the onboarding of the shipping line and the endorsements of the shipping line to move forward, that solution will never work, nor any other solutions, because we had to first work out how to mitigate their risk, to make sure that they had confidence to say, okay, deposit no more, we can go with the container guarantee. And so the first priority in setting up the business and the business model was to work on the value proposition of shipping lines. And so obviously, once we had that through, quite intensive, working engagements and brainstorms and so on. Once we had that in place, they still had misgivings about whether or not it would work. I mean, we're not, when we started in Tanzania, we were nobody in Tanzania. We were not Microsoft, we were not Amazon, we were just, via service and that's it. We were nobody. And so there was an enormous amount of engagements that we had to have with the local agencies in order to properly explain the value proposition, explain the workflow. And so we did that, through testing pilots, growing numbers of customers that the shipping lines were allowing the container guarantees to ship the container guarantees. So it's been a very, very lengthy onboarding process. But obviously, I mean, you can't understand shipping lines from that standpoint. They're releasing the only security that they have today in a quite challenging logistics environment. And bear in mind, we started in 2020. So in the midst of the worst possible.
It's a very easy period, Morgan.
Yeah. So, I mean, it was what movies are made of, right? So the worst possible ecosystem in a very challenging market, and so it was quite laborious. But as soon as we started, then obviously the value proposition is immediate. The solution works. The workflow on the platform is super easy. 5-year-old could do it. And then the process of releasing containers, the process when the container comes back, if there's a demurrage damage, we come in and we advance this on behalf of the freight forwarder. So we pay the shipping lines. So the shipping line don't have to chase after hundreds of clients. They only have one. It's us.
That's the value proposition right there.
All the administration of reconciling container deposits per container, all of that disappears. They don't have any more bad debt because 100% of the invoice is paid up front. And we've also been able to instill a very strong compliance system, whereby we're also able to leverage, revenues authorities, the regulators, in order to make sure that there is accountability, there is ownership from the customer standpoint to owe to his obligations towards via service. So one of the core feature of our solution is that we don't break the liability chain. We're not an insurance product. We just, sit neatly in between the two to be able to sustainably remove that trade barrier. And so far, I mean, it's been working been working very well. We started with 1 shipping line and we have 6. We have, in excess of 55% of the licensed clearing agents in Tanzania registered for the solution. We're serving all of the neighboring countries that are served by the Port of Dar es Salaam. But obviously it's been a process, and the shipping lines were the key and the most pivotal part of that equation.
Yeah, it sounds to me really, you describe a platform, you have a proposition basically, but then you also have the chicken and egg problem, the chicken and egg problem. Which side do you actually need first? And I think you made it very clear that the critical one in this case were the shipping lines actually to make it a success. And
Yeah.
did it also give you actually more insights or best practices all the way through, that if you would like to bring more innovative financial solutions or another business model that actually can help the SMEs in Africa to overcome the trade barriers and grow businesses? And if there are, how would you actually phrase them?
So I think, our business model and where we sit in the value chain provides a very direct, synergetic opportunities with trade finance, and especially giving access to competitive and customized trade finance solutions for our customers. For long, that customer segment has been very badly underserved by the banking community and the lending community, because they've always been perceived as a very high risk customer segment. And unless the banks are able to have the tools to properly de-risk these customers, only then will they be able to invest a bit more resources in providing access to this community of competitive financing, but also build up their expertise in the domain. Because banks so far, they don't have the logistics expertise. That industry, that sector is perceived, and that's not only an African issue. This is across the board. The logistics community is not perceived as a very strong customer segment or a very trustworthy customer segment. Sometimes it's difficult, even though it seems straightforward when you're inside. When you look at it from outside, sometimes it could be a bit messy. There are so many people involved. There are so many inefficiencies. There are so many intermediaries. There are so many things that can go wrong that you can't control, that the banks have for long been a bit away from or serving this from afar.
Absolutely.
So,
I come from that world. I was a freight forwarder for a long time, which kind of explains my haircut. We were not the most trusted bunch, unfortunately, right? Because it's not your assets. It's
exactly.
everybody else's assets, and you're kind of making promises to all these people. So the perception of the work that we do is not always the best. But if you look at global trade, freight forwarders handle a big portion of it, right?
Exactly. And so, keeping that in mind and trying to figure out where we sit in the value chain and what we can provide to de-risk that population, given the fact that we're, advancing the merge, damage, and then collecting this back, that we know how many containers a clearing agent is doing on a yearly basis, how many clients he's serving, to which destination he goes, how many demurrage cases he has on a yearly basis, what is his payment pattern. All of that provides for the most holistic operational information that you could get access to in order to make an assessment of that operator. But so far there's no tools, there's nothing that exists to capture this information. And given the fact that we're in the middle, we're serving all of those shipping lines and we're serving all of those customers, we're able to aggregate this information. And we're able to eventually, it's still not the case, it's an initiative that we're working on, is to be able to feed this into credit scoring solutions. So that, you know, a clearing agent that is currently, let's say, a blank page on a credit scoring because he didn't buy his car through a credit, or he never get access to a credit. Now he could have a historical database that will depict a truly honest picture of his business and financial fitness. And that tool will be, you know, quite a unique opportunity for the lending community to be able to, you know, have a different look at this customer, and through that different look, you know, see more merit than they previously saw in this customer for financing.
Is a credit score something that's available right now in Tanzania? Is that something that exists?
No, it doesn't exist.
Does not exist.
So, and this is what we're working on currently, and we hope to be able to deploy this pretty much in consort with the deployment in Kenya towards the end of the year.
Cool.
Very interesting, and I think that gives a huge amount of opportunities, as again for the SMEs, if that would be feasible.
Yeah, but not only for the SMEs, for the banks, for the shipping lines. I mean,
also, yeah,
on a yearly basis, there is about 1.5 billion US dollars that are idling with shipping lines in East Africa alone. So that's 1.5 billion that just disappears for a period of time from the economy. And, you know, that's huge working capital for, you know, a one-man, one-truck company to, you know, use that to maybe do more maintenance on his truck, or buy a new truck, or somebody to purchase a computer, to hire somebody else, do more to grow their business with additional marketing or business development. And all of those
like reframing microeconomies, maybe local economies, Morgan, if you set those funds free. I was wondering how local banks, I mean, the area I've been working in pretty massively, how banks and financial institutions are reacting to such a solution. Are they embracing it eagerly?
I mean, the ones that we've been reaching out to have been embracing this, because they see that, you know, this industry is heavily cash intensive, and unless you're able to offer a solution to that cash intensive industry that could in turn fuel further investments, then, you know, this is going to be dead in the water. I mean, this, you know, if you have like an inflow of 100 million, but you don't have any solution to offer that new customer to invest and turn that 100 million to $1 billion, then, you know, that 100 million or 10 million or 1 million will always stay debt. So, you know, there's a number of potential and benefits that you can see from all sides of the table. For shipping lines, you know, they also have interest in seeing their customers have more financial strength, more financial capabilities. You know, the operators to be able to invest more on their business. The banks to have, you know, more customers, more trustworthy customers to work with. So, you know, it could be a win-win situation, and so far, I mean, it's been welcomed from all of the actors that we've been in touch with.
So let's go back to the freight forwarders again, Morgan. These container guarantees or these cash deposits, would these freight forwarders make a profit off this? Typically in the past or today?
Yeah, for sure. I mean, out of inefficiencies, everybody's going to be making money.
Right. And that's what freight forwarders do, right? They make profit off of other people's work. So if a freight forwarder goes on solution, what's the win-win for them?
But the win-win is that they don't have to idle this cash anymore. or
So for them,
organize
it's
this with
cash.
so there is a process that is removed.
Mhm.
And the cost of a container guarantee is a cost that they can use to I mean how to explain.
Put somewhere else. End of story, right?
Yeah, but the cost of a container guarantee compared to the cost of having a container deposit and maintaining the process
Mhm.
is so little compared to the value proposition that you offer that the cost quickly becomes a bit immaterial.
So I don't know if you know this, but how much would they mark up those deposits from a freight forwarding perspective? So on $100 deposit or a $1,000 deposit, how much would they mark it up? 2-3%?
It could be even more.
Even more? Okay.
Even more.
So that 2, 3, 5, 10% sometimes, $10 on hundreds. For them, the manpower involved and the documentation involved is probably a lot more expensive than what they might be losing out of markup, right?
Yeah.
Because it kind
now
of
we're able
reminds me
to
of way back when here in Canada, freight forwarders and customs brokers would advance the duties and GST, the value added tax that importers would have to pay to the government, right? So the customs brokers would act as a middleman. They would add 2, 3, 5 whatever percent for their services, but they realized that advancing all that money was millions and millions and millions of dollars every month, right? Because the government says, give me my taxes, you have to advance that, and then you have to chase the importer for your money as a customs broker, right? So they realized that there was no added value, even for that, for making profit, there was no added value. And they started cutting that out and imposing that the importers would pay the government directly. End of story. They would act as a consultant. They would, tell you what the best practices were. They would tell you, hey, you have this amount to pay before the end of the month, so do it now. But they would not actually pay for the import.
Yeah. But I mean, this is also what we offer through the solution. I mean, an importer could purchase a container guarantee that could then be used by his appointed agent. So we're also providing a way to remove the middleman and leave the freight forwarder or the clearing agent to do the core of his job, which is to perform the clearance and forwarding of containers from A to B. A clearing agent or a freight forwarder or an importer, they're not in the business of managing container deposits. So if we're able to remove that, we're able to remove a middle process and leave everybody to do their job.
Removing the friction.
Exactly.
So you're very interested, Rick, in knowing more about the benefits. Been a long time practitioner.
So you used to be on the maybe importer exporter side, right, Andrea? So what was your main friction? What was your point of view in these kinds of transactions way back then?
Way back then, it was
Way back then.
Way back then, it was the continuous complaining when you have to deal with these transactions, the amount of time necessary for handling the documents, but not only the amount of money involved in these transactions. Not only Tanzania, but see, we had to deal with Morocco, we had to deal with Tunisia, we had to deal with Algeria. And you could realize barely the amount of bank operation involved, not only to release and to have an LC in place, but also when it comes to the operativity. Of course, the local customs authorities, they needed guarantees in place from banks to make sure that everything is in right order. So when you tap into this world, you realize how this minor steps, they do stand as a major problem. What struck me in Morgan's speech is that you tap into this industry pain point massively by doing so. So you unlock value the right way. Maybe you contribute to let the money flow towards those productive activities. And that's what I like most. This is my perspective, because one of the things that strikes really bad industry is the lack of available funds for international transactions. So enable smaller stakeholders step into the larger picture when you have reduced operativity. And that's one thing we have to keep into account, in my opinion.
And Bob, you're from the banking side, right? Do you deal with these emerging markets, or did you? And what was your pain point back then? Or today?
No, I haven't been involved with this emerging markets where we're referring to, but I do understand that, yeah, as a bank perspective, you also want to mitigate your risk. So you have to know really well all your clients, the customers. So you have to have the credit rating. And most of the times, a lot of these companies in the emerging markets don't really have access to it, to a bank or to a credit rating, as Morgan were referring to. So I see this as a great opportunity, not only as a value proposition, but also streamline the process, make it more efficient, make it more digital. And with that, you actually gain a lot of information, in this case, data, which you can use in order to get a credit rating. So actually start helping all the companies involved also with that by creating other business models. And for me, that's a really clear success story of a simple proposition, which leads to a platform. And with the platform, it's not only a transactional based on it. Now you can really develop a whole innovative business model around it, which you really serve a whole ecosystem. So in that perspective, I think it's extremely interesting. Call it use case, user story, success story. Actually, that it has benefits, reduce friction, and it can create even more. So it's not just a small solution, it becomes also a whole innovation possibility. And I think that is extremely great and beneficial for not only the logistics, but for trade in general. So I give in that perspective a big applause to all the work from Morgan. And I'm looking forward to hear more of it.
Yeah,
it didn't have to use blockchain, and it didn't have to use AI. It was a simple solution. But yes, Morgan, it's digital, right?
Morgan, just one question, one very last question from my end. How are local banks reacting to this? Are they receiving very well solution? What's the feedback you're having? Maybe you're working primarily on logistic stakeholders, but how the financial ones?
So we've been approaching a couple of banks in view of that sort of trade financing gap that we're trying to address. But before that, and in, let's say, the day-to-day business of the solution, we don't have to deal so much with the banks.
You're more between the steamship line and the importers.
Yeah.
So let me ask you this question, Morgan. It just came to mind. In economies where cash is king, right? For reasons that we won't mention. What's the downside of going digital, and how can we convince people who like cash that digital solutions and transparency and visibility and cooperation, how do we convince those people to move forward with, something a bit more transparent?
Well, I think for that, you need to have a very, very simple and immediately actionable value proposition. And if it starts to be too complicated, or if it starts to become require involving too many people or parties in the process, then obviously you're going to lose that opportunity to make a change or a dent in the process. They need to have immediate benefits to do their job faster, respond to market demands better, enhance, customer satisfaction, immediately get access to more cash. In order for them to be able to see that benefit beyond, the nice speeches and the all of the
Flashy
cosmetics.
colors and jargon, yeah.
At the end of the day, I mean, it's a world that is not going to be waiting for you. Mr. Train, you Mr. Train. You're not going to be going, and these are very, simple relationships. I mean, we're not, dealing with, I mean, it's not a complicated industry, right? I mean, but it goes very fast, and there's a lot of, it's a complex environment, but the industry and the way, they do their job is quite straightforward. So they need to have straightforward tools at their disposal to do so. And, but, in Africa and in other emerging markets, the access to technology is, it's far different than the way we got access to technology in Europe or in the US. Everybody has a smartphone in their hand. A lot of, the way you communicate with them and you market your solution is done quite differently in these parts of the world. And so you need to be able to keep that, in consideration when you try to market your solution, beyond how easy you have to make it look and used by the users, how also best to communicate with them. So yeah.
Do you get a sense that these markets are embracing technology a lot more, a lot faster than other markets? Because that's kind of what we see in the blockchain world. When we talk about blockchain specific to trade finance and supply chain, we see the African market really adopting digital technologies because they didn't have all the legacy stuff. Right, the growing into from no computers to green screens to Windows to now blockchain and emerging technologies. We've had these steps to go through, these maturities to grow up into, but the emerging market folks are jumping on new technology a lot faster than what we've seen in North America. Is that your sense?
Yeah, I mean, it's true. I mean, I would agree and partly disagree on that. There is on the part that I agree is that it's true. They have a much more, let's say, welcoming sense when it comes to technology.
Being more excited about it, right?
Yeah, they're very aware of the new trends, and they really try their best. But on the flip side, you would be surprised how much business is done outside of a computer. Just, folders of paper and a smartphone. Because the industry is still very much paper
based. Yeah.
heavy. So, and they don't have so many tools or CRMs or fleet management systems or all of those tools that we have. They're not applied in the same magnitude as we have here. And I think in order for them to be more and more confident to onboard new technologies, they need to have more time to do that. That means less time doing cumbersome work. So I think, the small steps will lead to a leap, a huge leap at some point. But you need to remove those small steps first. And once you do that, then, the growth is going to be exponential, much more than we have experienced in our part of the world.
It's encouraging.
And I think also the key is there again, Morgan, like you mentioned before, keep it simple.
Yeah.
But morally, they're the best practices, and it only help you to actually make this leap possible as well. Yeah.
Yeah.
So what can we do, right? What can folks like the association, what can folks like Andrea and Bob and Morgan do to help these tiny steps move forward a bit faster, either in these emerging markets or in more mature markets, right? What can we do? Because again, it goes back to human change management, right? Technology works, it's ones and zeros. It works or it doesn't. The big barriers that we all see, I think we all agree is us non-binary, whatever you want to call us, humans, right? What can we do to help these emerging markets grow up a bit faster? And what can we do to help, more mature markets grow up a bit faster?
Well, I think, that's probably what we've also discussed in a previous call, is not to innovate just to for the sake of innovation. And I think you really need to look at the real pain points. Make sure there is a real demand for that specific business. And for me, there is about 5 or 6 major trade barriers that everybody can get involved to try to reduce. There's the access to financing for sure. So anything that you can do to de-risk and be able to offer a platform for more competitive and more access to competitive financing will be key. Anything that you can do to reduce the transactional cost. So whatever you can do to reduce the middleman, reduce complex documentation, all of that will inevitably enhance efficiency and reduce the cost of doing business. Improve trust and risk mitigations. You can't, especially when you do cross-border shipments, or you work with a company that fits across the border or in another country, or you work with new infrastructure. Exactly. Custom procedures, optimization of customs procedures. Then obviously trade infrastructure. This is something that is a bit outside of our realm. And then trade and compliance regulations. The more we're able to enhance compliance, the more we're able to minimize trade barriers and pave the way for a more efficient and inclusive ecosystem and minimize disruptions. So I think these are, let's say, the angle in which I would like to see a bit more innovation in the near future.
Bob, any last thoughts?
No, I was also thinking more, do we require also more education?
Education?
Yeah, to make things actually simple. Because people will tend, when they're even in, what you described, very easy processes, and it's very well, we tend to make things very complex, start using all kinds of jargon, and do difficult about things, while in theory everything is rather simple. So I think also a lot of that is involved, like educational, and actually help each other, and therefore also make it much more easier to understand the other, and therefore make it easier to do collaborations and partnerships. Where also Morgan referred to that in this case, to make the chicken and egg problem really solved, that the shipping lanes were on board. You need to be able to talk to them and to understand them, to also reduce the friction and have them actually create value with the help of the platform. And I think in anything related to that, in logistics and trade in general, have the same issue. So we should overcome those barriers. It's also about language barriers in that perspective.
Well, thank you again.
Yeah.
No, thank you, Morgan. It was great having you join us. I was also seeing that you actually were recently at Trade Finance Global. Nice to see that the marketing perspective is helping in that. Great. Hopefully this will help you also, because I think what you do, especially with the great trade guarantee, the container guarantee, it really is something remarkable. And although you don't see it as some digital technology solution, I recognize a platform with huge amount of possibilities. And tomorrow we have a pre-chat with 2 people from the Politecnico di Milano. They're professors, and they wrote a book about platform thinking. And I think that would also be very interesting to actually understand a little bit the dynamics, because that might help you also with the business proposition in the future, how if you want to develop the platform, because it is one and you can really support the whole ecosystem much more. It has a huge potential. It's fantastic to see that.